Hi guys, I'm doing great. Yes, couple of weeks after, a lot of things changed. So yeah, happy to join the discussion.
And here I am with Immortal. How are you doing?
Hi guys, very good. A lot of things happened in the last 2 weeks, so
Yeah, couple of new things happened. First of all, Bitcoin reclaimed 75K. We are gonna answer if the bear market is over. We are ready for the bull run, or this is a trap. SAYLOR bought 40K, around 40K Bitcoin in 2 weeks. Incredible how much money he's picking with Stretch, and also he is on the run to surpass BlackRock as the biggest Bitcoin holder. So let's go to discuss. Let me share the tweets so we can analyze with the slides. Let me share here the screen. Here, let me do the proper share. And here we are. Bitcoin is up 21% in the last 21 days. Recovery signal, bull run starts, or bear trap? How do you think, guys?
Well, we were checking this in the Spanish podcast. I didn't know it was 21, but yeah, exactly. I ran the math later. From 62 to 75 is 21%. Looks like nothing, but it's 21%, which is effectively almost half of the drop from the all-time high in terms of percentage.
Yes, in terms of percentage, is half of the drop from the all-time high. And what we have seen in the last weeks is that since the war started, Bitcoin is, besides oil, of course, is one of the best performing assets of the world, more than stocks, more than gold. And you, Marco, wanted to discuss that.
Yeah, I think it's pretty remarkable to see that in such chaotic environment, especially after the USA attack on Iran of a couple of weeks ago, to see Bitcoin not falling more, but actually reverting the trend, and actually, as you said, being among the best performer. And so I don't know, maybe we can read it as the market is confident, maybe that in terms of liquidity, in terms of overall structure, this war won't last so much, and then all the implication will probably be transitory. So that's why Bitcoin can reflect this into this kind of leg up. But yes, I think it's pretty remarkable. We still need to see probably more weeks, maybe even more months to call finally if the bottom was at 60. I think it's very positive signal that Bitcoin is showing. For me, it's more important to see this than other kind of metrics, because the price at the end of the day, it's the summary of all the information in the market. So probably the sellers are a bit exhausted and the buyers are jumping in again. So I think it's pretty remarkable.
Yes, and also we are on the way to close the first green month after 5 or 6 months. That this is also very important because, as you said, the price is important to, especially for the new people coming to the space.
Yeah, price is super important, and people that say that is not, are kind of not very honest. Of course, it's not everything, but it's important. So if we see that Bitcoin, like in this slide, is up 21% in 21 days, despite the massive chaos, I think it's a very strong signal that the bottom might be in, and that the momentum for the bulls are kind of climbing higher again. So yeah, I think it's positive.
In the last week, I had this feeling that only one player can pull this market back up, which is SAYLOR.
Mm-hmm.
Because if you're getting $1 billion per week, I think in the last 2 months, in total is like 5 billion. If you have that ability, disregarding all the participants in the market, ETF, retails, FOMO situations, bad sentiments, whatever it is, if you have a player that had the ability to pull $1 billion dollar from the fiat Ponzi scheme from Wall Street. This is a black hole in Wall Street. If you can keep pulling this at an increased pace, I think that would be enough to move the price of Bitcoin up. Just considering that in the last week there were days where the amount of Bitcoin bought by Strategy were 10 times the amount of the supply of Bitcoin, of the daily supply of Bitcoin.
Mm-hmm.
So that in itself could be enough to move us in the direction that we should have never fall in first place.
Yeah, completely agree on that. And what do you think, guys? Do you think that we can reach again 100K this year, or even all-time hikes? Because there is a mixed narrative. Some people say that this is probably a recover, but it's a bear trap, and we are going to keep going down until the end of the year. We are going to be in 60 by the end of the year, and from there, we will start going up. What do you think about this narrative?
Yeah, maybe Diego, I go first. I think in that specific narrative, I think Bitcoin usually doesn't do strong V-shaped recovery unless it's really supported by massive money printing or massive stimulus from the big government and by monetary policy in a easy mode. So to me, if it's possible, I would give a low probability. I will give a much higher probability if the Federal Reserve and other central banks will be forced to push more money into the system or to decrease pretty fast the interest rate because of some kind of problem in the plumbing system of the financial, like for the treasury, or if the wars maybe it's gonna be much more problematic and much more costly. So unless there is a big reason to inject massive liquidity, a bit unexpected, I wouldn't see Bitcoin V-shaped recovery to all-time high this year. But again, I'm not excluding it. I would put like a lower probability to this case. My scenario is that we will probably consolidate a bit more, and probably we will go to like higher than here by the end of this year. But I'm not sure if we can break all-time highs so quickly, unless there is again a big reason from central authorities to pump money because the situation is getting very bad.
You're so bearish, Marco. Today we read another news from the Federal Reserve. Exactly, 15 billion is being practically printed to repurchase treasury bills. Is that money coming from taxpayers? Absolutely not. Is that money coming from any kind of reserve? No. It's just going to be made out of nothing. So if that is not your signal, the one that you are waiting for, in any case, if that is, if the only narrative that we have is that the Federal Reserve needs to print money for Bitcoin to go up, we might be waiting for several months, because as we know, from the moment that the money is printed at central banks or Federal Reserves, and it's translated into the real economy, it usually lags 12, 16, 18 months. We've seen that also in the Argentinian economy with the inflation. So from the moment you cut the money printing, your inflation gets back down around 2 years later. Same happened on the other way. Every time you print money, you have this lag where it takes several months for the money to translate from the Federal Reserve buying back treasury bills, and then that translates down into the banking system, and then translate back into the real economy. So it takes time for that. I couldn't count with the Federal Reserve just print 15 billion. That is going to be enough for Bitcoin to go up. But what is real is the 1 billion per week that SAYLOR is pulling out of the Wall Street right now. That goes right up into Bitcoin without this all the other participants in the economy in the middle.
I
for sure. If we have, sorry, Fernando. For sure, if we have like a combination of those two, which I think it can be very likely in the near future, with SAYLOR keep increasing via preferred offerings, via MSTR and via other instrument, and other maybe company join the way, plus the sentiment will be from complete depression to normal. And then, as you said, Diego, we'll start to see 50 billion from the Fed, 30 billion from the ECB, 20 billion from the Bank of Japan. And then after months, their balance sheet will start increase. Then yes, it's very likely that with some transmission of money of, as you said, like 12 months to 18 months, we will see probably the higher kind of phase for risk asset, and Bitcoin being one of the best risk asset to appreciate. So I think the setup is very credible. So now we need to be patient and see how bad the things will unfold, and then of course Bitcoin will reprice itself.
Right.
Yeah, I think so. So, but anyways, I think that we can be reaching 100K this year, and probably by the end of the year we can see an all-time high, because it's not a V-shape. If we think from now March up to probably November, December, it's not just a V-shape. But
no, we've been lagging for how many months? 3 months already in the range in between 90 and 60. So that there we spend like 3 or 4 months. Probably you have another 2 or 3 months to back up to that area of the 90K. But the part that it might be a little bit confusing is the first news that we read, this one, is we pulled back 21% in 2 weeks.
Yeah.
That is exactly 2 weeks, 21%. If we pull up another 25%, we would probably be in the range of
90K.
25 more?
Yeah, 21% more is around 90K.
90K.
Yeah, around
exactly. Yeah, so that's what it would take. A couple more of 20K, and we are back in the all-time high area.
Yeah, plus the sentiment on the market seems to be recovered, while the stock market fear and greed is going down. The Bitcoin fear and greed, or the crypto fear and greed, I don't know if you have the chart, if you want to share it.
Let's see that.
Yeah, we can see on CoinMarketCap, I think
No, we have our own one. So
you have your own one. Sorry, guys. Sorry.
You can share.
Yeah, 44.
So we have this that is now we have in 44. We're in 44, and we need to take in consideration that we were a few weeks ago, we were just 5. That 5 was lower than the FTX crash. When was the FTX crash? The fear and greed was 9. And we were 5 a few weeks ago, and now we are back in 44 in neutral. So I don't know if this triggers some optimism for the year to come, but let's see.
The thing is, obviously, the fear and greed doesn't move by the absolute value of Bitcoin, but by the speed up of the recovery. So that 21% reflects the fear and greed moving from 5 to 44. It's a reflection of how fast it moved. It's a momentum expression. The same way it goes down that fast, right? But anyways, what is weird is that for all these months, the stock market was around 40, 45. Bitcoin was in extreme fear at 5, 9. Now it reverts. Bitcoin is at 45, 45, and the stock market yesterday was down to the orange-red area. So like the macro is not helping, and Bitcoin is showing this sign of recovery. Let's see. I think it's a matter of hovering around here for a while, but eventually, maybe the range in between 75 and 90 passed really quick. Because we also went down very quickly from 90. I don't even remember when we were at 80 last time.
Oh, yeah, we were.
It was like one day.
By the end of January, we were in 90. Yeah, I check it.
But I don't remember that we were we've been hovering at 80 when we were. I remember we were at 95, and the next day we come and we were at 60.
Yeah, it's like when you go out and you drink and you wake up on your bed and you don't remember what happened. I think that this is what happened with Bitcoin. So I think that if this happened during a war, I think that it can go higher even more. So let's see if we recover fast or not. Let's keep sharing the slides. So let's move to the other one. Michael SAYLOR announced that they bought 22,337 Bitcoin this past Monday, and he had announced another around 18,000 the previous Monday. So in 2 weeks, Strategy bought around 40,000 Bitcoin. They are not stopping.
Yeah, I think it's the most unbelievable story of the last month. I think crypto Twitter, I mean, X, it's like full of people now talking about Stretch. So I think it's kind of telling why, because again, when you can issue an instrument and raise billions that easily, of course, it needs to be spoken about. And yeah, I think the last 2 weeks has been crazy. And even the most bullish among us probably couldn't foresee in such a short period of time SAYLOR being able to monetize fiat capital so quickly. So I think, yeah, that's the main catalyst why maybe the winter in Bitcoin is not coming back, because you have this madmen buying as soon as possible every Bitcoin on the market. And I think it's not going to stop anytime soon. And probably we need to revise also our 1 million time frame, because I think I said more than 1 year to reach 1 million for Strategy. Probably they will, at this pace, they can reach 1 million in 2026, which is insane. So
yeah, well, the next bet would be at what time during this year Strategy overcome BlackRock.
Yeah, that's for those who are on YouTube, they can vote when is gonna Strategy surpass BlackRock. April, May, June, or more, or never. What do you think, Marco?
I mean, right now, BlackRock, how many Bitcoin do they have?
I think that 800,000 something. Let's see. Can you search for it? Right now, Strategy has 761,068 Bitcoin. Their average price is 75,600. Yeah, of course, 696.
SAYLOR, so yeah, they have 23,000 Bitcoin difference between BlackRock and Strategy as of today. I think 23,000.
So we are just 1 week away to surpass.
Yeah.
I put April, but we probably will be in March.
Yeah, I mean, if the first option is April, I will go with April.
Yeah.
This is all that is accomplished in March already.
Crazy. Yeah, but it's insane. Again, what I want to mention is that it's insane because all of this was done during, I don't want to call a bear market, but through a brutal correction with a lot of attack against SAYLOR and treasury companies. Remember the rumors that Strategy was going to be taken out of this index? I don't even remember. MSCI, all the bad news, all the FUD for Strategy, and they were able to buy more every week. And soon they will surpass BlackRock and will be the second holder after Satoshi Nakamoto. And then SAYLOR is going to go to take the leader position.
To take the leader position, it's this week is going to be bearish for Strategy. Last week, during the week when I was checking Stretch day by day, my prediction was that Strategy would buy 30K Bitcoin for Monday. It was a little bit short than that, 22, but not so far. So I was kind of okay with the prediction. But that was very clear because for the previous 2 week stretch was trading above par every single day for 2 weeks.
Yeah.
Now, the first 2 days, we are not trading above par. It's 99.8 or something like that. And it was due because, how is this mechanism? I'm not very clear, but I think I have an idea, which is last week, the previous week, there was an incentive to buy stretch because even if you buy for a short period of time, last week, you get the dividends. So there was a lot of people entering, and you can leave this week and you're fine.
Yeah, just to collect the dividend and then sell it. Yes.
Right. So it's normal that the previous week was an all-time high in volume, and this week is going to be a little bit lower. So probably let's see if this week we achieve to go above par again. Otherwise, the volume of Bitcoin's purchase on Monday, the announcement on Monday, is not going to be that big. But as the price of Bitcoin remains at this level, maybe he can still use MSTR for the purchase of probably another 2-3K for the next month.
Yeah, probably they will buy less than 10K, but when Stretch comes back, they will surpass BlackRock.
And it's yesterday closed at $99.88 Stretch with 152 million in volume. So it's like literally pennies close to 100. So I think maybe this trading day when the US market open, maybe Stretch can almost go already at 100. So today, hypothetically, SAYLOR can tap ATM again on Stretch. Then Thursday and then Friday, especially if Bitcoin is showing this momentum. And yeah, maybe I think this week, so next Monday, they will announce much more done via MSTR, so they can increase the capital behind Stretch, increase the credit quality of the instrument, and so give maybe extra incentives. And yes, as soon as they reach par, probably we will see more weeks of smashing ATMs. So yeah, I think it's a great instrument for bear markets and consolidation, and they deploy to perfection. And I think it's the greatest innovation of financial market over the last, 5 years minimum, so even more. So great.
It's another example of this is Stripe, is ASTT, announced that they moved $50 million from treasury bills that they previously used as a form of cash reserves to pay dividends. They move it into Stretch. That transition alone provide the company an extra around $4 million per year on dividends, because the math is pretty simple. 15 million at 3.7% versus 50 million at 11.5%. So with that simple move, which is basically the same, it's not that they get, because that's when some people got confused. They thought that Stripe got new cash. They buy a little Bitcoin, like 200 or something like that, and then they buy Stretch. So they have some criticism about that. But the actual move was just a transfer between the cash reserve in treasury bills that they have into Stretch, because it obviously makes more sense. And that alone provide the company another $4 million per year that they can use for either backing up the dividends or operational costs or whatever it is. It's just a simple move that is pretty common also in any other corporation. There are many corporations that just survive on this kind of financial instruments where your cash flow is provided by fixed money instruments. So that's why it becomes so popular, and the volume reflects that, right? The other data point that we observed was, I think, one of the highest volume in all the preferred stocks was somewhere around $10 million per day. I think was one of the big bands. While Stretch is trading in a bad day yesterday, 150 million.
Yeah, I don't
the
have the
average of the month
data.
was like 200 million.
Yes.
So it's so much better, and it already becomes so much popular on all the rest of the competition that it's serving as a perfect black hole or Trojan horse, whatever you want to call it, for Bitcoin inside the main financial system, Wall Street.
Yes, yes, totally agree on that. So next one is strategy generated 16,622 of Bitcoin gains last week, worth 1.2 billion. The machine is working as it was designed. Next one.
Yeah, yeah. And again, guys, I mean, I'm just checking now. The MNAV is still 1.2 for strategy, which is incredible. So every time they issue the common stock, they can capture the 20% premium, which again, in a consolidation or bear market is incredible. All the other companies, treasury companies, have the multiple still very compressed. I think only Metaplanet at something 1.01, 1.02, but strategy is 1.2, which is like much more expanded. So yes, every time these do this kind of transaction with MSTR now, it's fully accretive. And then when you do stretch, is 100% accretive at first because you don't have to repay the capital. So yeah, I think it's for SAYLOR and Fengli, it's a dream scenario to have 1.2x MNAV and be able to allocate that much also on stretch. It's a perfect engine they designed. So
yeah, and also SAYLOR mentioned in this tweet, BTC gain is the closest analog to net income on the Bitcoin standard. Next one. Michael Saylor's strategy could surpass BlackRock BTC holdings in the next couple of weeks. Soon, strategy will be the second Bitcoin holder after Satoshi Nakamoto. And we can see the graphic. That is, the distance is getting closer. And as Marco says, we are 20K Bitcoin away of strategy surpassing BlackRock.
But the important difference in that graph is the blue line, which is that's BlackRock, right? The blue line have inflows and outflows, while the red line have only inflows. There is nothing going out.
yeah.
Every time SAYLOR buys, these Bitcoins will never see the light of the day anymore. While in the ETF, money comes and goes. So it will be surpassed pretty quickly, and then it will spread out. I think strategy will have a lot more than the ETF.
Yeah, and also the most important thing for this is for Bitcoiners. Just don't miss the point. Of course, strategy holders is good, but for the Bitcoiners, and especially the Bitcoiners that are critics of Michael Saylor, of the Bitcoin treasury companies, that most of them say that Bitcoin treasury companies will be the shitcoins of this cycle, that they blame treasury companies of what happened to Bitcoin. They need to understand that this Bitcoin that SAYLOR is buying, they will not be moving. So are Bitcoin that are out of circulation forever. It means that it is good for everyone holding Bitcoin.
It's like a person who just bought Bitcoin was hit by a truck. Will never see those Bitcoins again.
Yes, it's like a person was hit by a truck and didn't have a inheritance, wallet, or whatever. So these Bitcoin are out forever. And the never miss the point of what SAYLOR is doing. That is something that today I was sharing during the stream in Spanish. Here we have, this is old. It was made by Jesse Myers from the Smarter Web company. This is old. The gold now is around 30 trillion US dollars and Bitcoin is 1.5. So the market cap of Bitcoin compared with the global wealth is infamous, is nothing. It's just 1.5 trillion compared with 330 trillion from the real estate.
1%.
Yeah. 300 trillion from the bond, 300 trillion from money.
0.1%.
0.1, yeah.
0.1%. So if we want the hyper-Bitcoinization, this 2 trillion, we need to move up to 100 trillion. And who has the power to turn this 2 trillion or 1.5 trillion today into 100 trillion? The treasury companies, because they have the power to create this kind of instrument that target this amount of money.
The players that are there, basically.
That's it.
It's those 300 trillion. The money market 120 something. The players there, they are not by design allowed to invest in that tiny little dot over there, just because of a matter of size and a matter of regulations. So when SAYLOR is creating this instrument, it was a very big innovation because it allows, and not yet all of them, but at least we start allowing some of these institutional money to go indirectly into Bitcoin. So what is important here is that that little dot grow at least to the size of gold in first place. Once we reach that level, we will be taken serious. All the money is going to speed up, and that's why we call hyper-Bitcoinization. It's not the other way around. This is not going to be achieved by promoting circular economies in Africa. It's going to happen this way.
Yeah, and that's for the Bitcoiners who criticize SAYLOR. What he's doing is taking this money, probably a little bit of this and of this, and turning into Bitcoin. There is another graph with the pipes that show the flow from here, and from here to Bitcoin, and it's gonna help us all, the Bitcoin holders, and even the people who don't hold Bitcoin, people who has pension funds, and these pension funds now are allowed to invest in this instrument that SAYLOR and other companies are creating. So again, in the English speaking world, there are haters, SAYLOR haters or treasury company haters, but they are not as big as in the Spanish community. So this is something that we always talk in the Spanish podcast. And on the other side, MetaPlanet just raised 255 million to buy more Bitcoin. The Japanese company will soon be buying Bitcoin again. This is amazing. For MetaPlanet, again, we always like to point this company that is a hotel company that was almost bankrupt during the pandemic, and they were able to overcome this problem by adopting a treasury strategy. That's the power of a treasury strategy. And now they raise more money and they are buying more Bitcoin.
Yeah, I mean, SAYLOR delivered the playbook, and the smartest people and the most visionary CEO founders that have been curious on the space and pro Bitcoin since on their own journey. They took the challenge, because it's a challenge to convince the board of directors, to convince your own shareholder that you need to pivot into this new asset class and to this new kind of instrument. So I understand why this conversion is not taking place so quickly, because majority of shareholders are like probably 50 years old or plus. Majority of the board members are 60 years old or plus. So it's not easy overnight to just paint the word orange for the corporation. But I think it's beautiful to see that those companies that moved first, that took the courage and the visionary steps, are now not only thriving, but also dictating the change in their own markets, because now MetaPlanet is among the most traded stock in Japan. I think like average is like top 15, bigger than Mitsubishi, bigger than other massive names with hundreds of years of history. So I think it's great. And hopefully we will see others as well. The Smarter Web company in the UK, other maybe in Latin America, other in Europe, that can be the champion into this kind of industry and support the Bitcoin thesis. So yeah, I think it's lovely to see that they can raise 255 million and keep stacking. So
yes, talking about Smarter Web company, I will be streaming with Andrew Webley on Monday 23rd of March. I think it's 6 p.m. Hong Kong and 10 a.m. United Kingdom and 11 a.m. Europe. So stay tuned. We are going to be discussing everything that is happening now during their incorporation to the London Stock Exchange and the Bitcoin Treasuries and Conference that is coming on May 29. And here is something that I wanted to discuss. Halvings are obsolete. Bitcoin halvings are officially obsolete. Strategy by itself is now absorbing the complete mine supply of Bitcoin since Q4 2024. This one entity and does not include IBIT or other spot ETF or treasury companies. SAYLOR ability to buy Bitcoin goes up as the price keep going up or down, no matter the price. So what do you think?
Yeah, plus the miners as well are not selling Bitcoin very, dumping Bitcoin into the market over the last couple of years. They've become much more kind of stable and having different source of revenues or financing, so they are not in the need of dumping all the Bitcoin. Plus, as in this post is pretty clear, SAYLOR is just dwarfing with buys all the mining of the new Bitcoin, and now we only have less than 1 million Bitcoin to be mined for the rest of time. So, I mean, I think it's pretty bullish, and people should understand the dynamics, should understand the mathematics behind and the real scarcity of the next 114 years for Bitcoin.
Yes, I think that the mathematics are clear. If we have some person buying, that's for the people who analyze the graphics and throw lines and do this technical analysis and says, no, because the 4-year cycle now we are going to fall up to 20K because I don't know which kind of stupid mathematics they do. Now we have a guy that is buying more than what minings are mining. Only miners are mining. Only one person, only one company, not counting all the others. So that's a very big incentive to remain bullish. I don't know what you think.
No, the thing is, it's clear for me that the so-called 4-year cycle, it was never because of the halvings. Maybe it was at the beginning in the first 1 or 2 cycle, or halving cycle. But then that narrative picked up some speed and everybody adopted. But it's clear right now that it doesn't have anything to do with that. Obviously, the scarcity will reflect on Bitcoin every time we have this halving cycle. But these kind of things are measured in years, in decades. So it's not like because of the halving, now we have a bull and a bear cycle. That for me doesn't make any sense, especially when you overlap something like that, which make it clear that now we have way more inflows than outflows or than production. I mean, and at some point it's gonna be reflected on the scarcity, independently of if the halving cycle keep happening or not. Let's assume there is no more halving cycle after this, and SAYLOR keep buying 1 billion per week. So the price is there is no way that it can remain flat. It's gonna be moving up to the right with the halving cycle or without the halving cycle. So that's because of the demand is way bigger.
Yes. I agree on that.
Maybe, guys, can I just point one thing? If it's true that the bottom was in at 60, and so Bitcoin just had a drawdown of roughly 50%, which is much more common than people think. Minus 50% on stock is super common. It's very common on high growth stocks, on tech stocks, like Tesla just had minus 50% 1.5 years ago for apparently no reason. So minus 50% on high growth associated risk on asset is very, very frequent. So if it's true, what if we are still more in the theory of the super cycle since 2022, of Bitcoin entering this new channel, and the minus 50% is not the typical bear market drop event, same catalyst that we saw in the beginning, but is a different pattern. And we are now, especially for the future, moving into a different trajectory, in which we might see some drawdowns, maybe 50%, 40%, but not the completely obliteration that we saw in the past, minus 85, minus 80. And if it's true, and SAYLOR keeps buying, more companies keeps entering, the scarcity really plays out, and especially the chaos will increase. So like chaos, financial chaos, problems with the deflation from AI, and more money printing, we can see this channel going, and just Bitcoin going up, repricing, and going some correction down, but not in the similar fashion that we had in the previous cycle, because now it's completely different. Halvings doesn't matter anymore. Institutions are buying in size. We have different market dynamics, so it's completely different. And I would say 2022, maybe let's say 2024, with the ETFs are completely changing the landscape also for Bitcoin. So I will be very interesting to see if we have a different pattern over the next years, more into this gradual fashion to the upside.
Let me share the tab of the Power Law. So let me share the Power Law so we can analyze with the Power Law, that is mathematics, what is going on. So what you can see, we can see here is apparently, well, remove this peak that was at the beginning, but what we can see here is one peak, another peak, and another small peak. We can say that these were the halving cycles. So like a drop, then a bull run, and then another huge crash. After the 2022, check this, Bitcoin was most of the time close to the fair price of the Power Law, line. Went down during 2022, then recover, but we didn't have any explosive movement that was, remember before, after the halving, everyone was expecting Bitcoin around 250 or 300K by October last year, and then a drop. We never had these prices, so that's why we didn't have a huge drop of 80% as everyone was expected. Bitcoin, with the institutional adoption, I think is taking the Power Law. Check this. We didn't have an amazing bull market, but that's why we are not going to have, in my opinion, a crypto winter. We have...
this is a crypto winter. We are already in it. Yeah. The discussion is that people think that these bear markets are by time.
Yes.
So they put all their bets on the peak of the bear market will be in November, just based on this bullshit.
Yes.
Like they're measuring peak by peak, and then they say it's going to be November, which means if now we are at 60, in November we probably will be at 30. That's what they call math.
Yes. Yes.
So that's total bullshit.
Yeah.
And my point is, I'm pretty sure 60 was the bottom. Pretty sure. The volatility of Bitcoin came down from the last 3 years to around 40%, which reflects exactly the drop down. What is the volatility? The implied volatility. The way it's measured, it measured exactly how much it can go up or down. 40%, and there we have it. The implied volatility of Bitcoin has been around 40%, so we draw down 40 or 50. We are exactly on what the reality is. If it will go down to 30, it would imply that the Bitcoin volatility would be 100%, which is not.
Yeah.
So the same you can say for strategies. Strategies right now, I'm seeing on the graph is 74 implied volatility, which is almost double of Bitcoin. We know this from before. So the run-up or the drop-downs are usually a pure reflection of the implied volatility. So if you want to know how much is going to be the next drawdown, just check out the implied volatility. It's pretty simple. You don't have to speculate if it's going to be more or less because of some other magic astrology chart.
Yeah, and what they say, like we can check the power law. Bitcoin under 42K, the probability is 2.5%. Under 72K is 16.5%. And on the other side, we have a probability to go over 254K, that is 16.5%, and over 600K is 2.5%. That's the real math, not the math that the technical analysis says.
So the best interpretation for power law is exactly that, which is it's not going to predict you where you're going to go in the next 2 months, or maybe not even in the next year. It's a long-term prediction. And the key element is that it's not even predicting the price. It's going to give you the prediction of the probability of the price being in such a range. So that's the way that you can read the power law. It's going to tell you exactly what is the probability of price being in between this range, which you cannot do throwing lines on a chart and drawing magic head and shoulders and bullshit.
Yeah, and guys, the R squared is still 96%, which is insane. If you do any kind of regression on the data that you have in other stocks, other index, or in generally whatever you can observe with data, you will be satisfied if you have a regression or an R square of 75 or 80, because it means that is a statistical relevance on the observation and you find something. But 96 is unheard of. 96 is incredible. As similar to Stretch. Stretch has a Sharpe ratio above 3, which is unheard in finance. There has never been any instrument with a Sharpe ratio more than probably 1.5 or 2 for at least few months. And now I just checked, now it's 5. So I don't know, either the math is broken or Stretch is too good to be almost true.
Yeah, well, but
why?
Because the Sharpe ratio implied, I have the implied volatility on it. So
yeah.
As the volatility of Stretch goes to 0, the Sharpe ratio goes up. And you have also this fixed dividend. So it makes it pretty easy to understand investment through Sharpe ratio with Stretch. With Bitcoin, it's a little bit more frustrating because you have an implied volatility that might be 40, 50. It will be fluctuating badly. And so the Sharpe ratio will be more complicated to understand. But for Stretch, when they mentioned last week that it was around 3 or 4, which is crazy for a Sharpe ratio.
Crazy,
yeah. It makes sense because if you can control the volatility to almost 0 while keeping a fixed dividend, obviously your Sharpe ratio go to the moon.
Yeah. And it will obsolete probably all the other indexes, because the more people will see those simple data. You have a very high Sharpe ratio. You have an instrument that is almost pegged all the time to 100. It pays double the dividend on the other compared to any other fixed income instrument. And if you see just simply on a return basis, it's even higher than the S&P majority of the time. It's a no-brainer at some point that people and financial investor and other financial firm will start to say, yeah, maybe I don't understand fully Bitcoin, but this thing is over collateralized, this thing is pegged, there is an history of more than 1 year. Maybe it's time to studying it and maybe allocate something to it, because it's so obvious. Mathematically, it's so obvious.
There is another important data point for corporate investor, which is the liquidity. Don't take this lightly. The liquidity that this product have, it allows a big investor to come, because imagine, I don't know, you want to invest in Bank of America preferred stock, if they have it. I don't know if they have it. And the liquidity is 2 million per day. And you want to invest 100 million. Yeah. It would mean that if you want to get out,
1 year.
1 year. But with Stretch, now you have the confidence that you can put easily 10 million while it's trading 200 million, and then you have no problem to get in and out.
Yeah.
Yes.
Yeah.
Yes.
Yeah, and the law perspective is superior, is better. Why? Because it's built on Bitcoin. Why the power law on Bitcoin is superior to Ethereum, is superior to any kind of stocks? Because Bitcoin is the most open, secure, centralized network based on energy and all the properties that we know. And so if it's true, and this is true after 17 years, the correlation is better than in any other financial observable instrument that we have, and by far, because 96% is insane.
The only thing that it might have a better correlation is things like the M2 and the S&P maybe reach in some time frames like 99%. But that's not even a power law, that's an exponential, which is easier to match. Because it makes sense, right? Your rate of increase of the money in the basement is 8% per year, pretty consistently. It makes sense that that money is translated into the S&P directly.
Yeah.
So when you trace that, that's not a power law, that's just an exponential with the 99% match in that correlation. But in terms of power law, the maximum that you will find ever is Bitcoin with 96%.
Yeah.
Yes. Well, and let's move to the last topic that I want to share, and Marco wanted to talk about this.
Yeah, so maybe before sharing, I want to give you, maybe let's do a small game. It's very quick. So on this website, the USDebtClock.org, you have the time machine. So guys, what do you think it was the national debt of the United States this day in 2020? So exactly 6 years ago. Guess.
I don't know, less than 30 trillion.
No, try to be. Let's try.
In the range of 20 to 25.
Range 20, 25, and below 30. Okay. So the time machine said it was 25.9 trillion. So in just 6 years, for me, that's why I think that Bitcoin could be in an exponential kind of super cycle trend, because we are in a super cycle debt pattern, because the US increased by 14 trillion in 6 years.
Yeah.
I mean, I don't know how differently to say, but it's simply mind-blowing. And I think it's similar also to other countries. So there is no time machine also for other nations, but I'm pretty sure that if we see all the G7 economies, might be similar, the trajectory. Maybe the US is a bit more steeper because of the insane stimulus they had during COVID, but similarly in Europe, similarly in Canada, in Japan. So the pattern is obvious. We are in a super cycle debt.
There is no way out of that. That there is no way out of that. It's not
there is no way out. The only way out is that the Treasury needs to be in a yield curve control. I mean, needs to force the Federal Reserve for the America, similarly to what Japan is doing for almost 5 years now, of the yield curve control, because there is no natural organic demand for your own debt. And so at some point, someone needs to step up, because otherwise, if you have a failure into the auction of your treasury, is a big problem. And then you need to have all these liabilities coming to your every quarter. So I think the US is very, very close to a yield curve control. Japan is already in a yield curve control. And I would suspect that this is not going to stop anytime soon. It will accelerate. Especially in the US, they need to refinance 7 trillion this year, probably other 5 to 7 trillion next year. Plus, they have more expenses because Trump wants more military budget, wants more on other items of the balance sheet. So this number can balloon very quickly to 50.
Well, that was exactly.
So we are in an exponential trend on debt.
The news about the Federal Reserve repurchase of this 15 billion is exactly part of what you are talking about, the yield curve control, which is they need to buy back these treasury bills to control the rate. Otherwise, it will get out of control and everything will be messed up. And that comes just from money printing. It's not that it's coming from the magic saving account of Fed.
I think
Yeah,
Marco.
and I mean, over the last, I would say, two administration, their strategy was to use the short term, but the short term is short term. It's not a resolution on the problem. And they realized that if you have 10 trillion to be refinanced, maybe you can do 1 trillion in short term, but then you have still 9 trillion to be refinanced. And unless you pay a fair amount of interest rate to the investors, nobody wants to buy 9 trillion. Maybe you can fulfill 1, 2, 3. So you still have a gap, a massive gap of trillions of dollars that probably will go unfulfilled unless the Federal Reserve will step in. But it's a circular reference because it's another arm of the US government at the end of the day. So,
money printing through this mechanism of yield control and the national debt of the US is definitely one of the arguments for Bitcoin going to the moon. But
yeah.
I would keep it, that is a default to me. I already put it in my basket. What I think is new in the argument of Bitcoin being pushed to the moon is that this new mechanism of treasury companies being able to get money out of the system so in such a massive way.
Yeah.
On the other side, what you can see here is with the speed of growing of the national debt of the United States, you can see what the money is worthless, how fiat scam works. And this is another, of course, no financial advice, but is another incentive to go and stack some sats. Because I think it's incredible, like 14 trillion, almost the market cap of art on debt in just 5 years. So in 5 years, if we use
it's 10 Bitcoin.
It's 10 times Bitcoin. So with the money of the debt, the increase of debt of the last 5 years, United States could have bought all the art on Earth. So this is insane.
Yeah.
So anyway, so I think that no financial advice, but these are incentives to go and stack sats and study Bitcoin and understand how this fiat Ponzi scheme is working. So I don't know if you have anything else to discuss.
I think we can close with that.
Marco? I think he's frozen.
Yeah.
We had a big conversation. And
Marco,
you hear me?
He's getting frozen. Yes. Yes. Are you back?
Yeah, I'm back. Yeah, I think so. So no, I was saying
Yes.
that we can close because we had a big conversation on many topics. So I think it's fine.
Yes, excellent. And luckily there was no problems with the cam, no problems with internet. A few frozen. Let's see how it's going on next week. That we are going to be 3 persons in 3 different places. So let's see.
The trifecta.
Let's see how it goes.
The Southeast Asia trifecta.
Let's see how it goes. So
That's right.
let's see. So Marco, thank you very much for your time. How is your social media so our followers can follow you?
Yeah, only on X, Batistoshi93. Feel free to join. And thank you guys again for another good conversation together.
Excellent. See you next week. And thank you to everyone who is on the other side. Remember, on Monday, 6 p.m. Hong Kong, 10 a.m. United Kingdom, 11 a.m. Europe, I am going to be talking live with Andrew Webley, the CEO of the Smarter Web Company. Thank you for being on the other side. If you like the episode, give us a like, subscribe to our channel, follow us on social media, follow Marco also on social media, because doing so, you help us a lot in our mission of painting the world orange. See you next week. Thank you very much and have a great day to everyone.